All right. Final part for this week, investing. And then I think we've covered quite a bit. This chapter is really cool because I'm going to introduce yet another list of names to add to the people that, you could be following to learn a thing or two, besides us, obviously. Just kidding. And yeah, so about strategies, I talked about it a little bit already in the previous video. I'm going to keep it, really, I promise, I'm going to keep it a bit shorter, this one. Because we've got a little bit less to cover. Bear with me. There we are. So investing strategies, copying the greats. Why not look at the people that are actually really, really good at this game? The billionaires, the most successful, the legendaries. Why not look at how they operated, what they were seeing, and try to learn from them? But before we get to some of examples, some investing strategies, or at least I've made a small list of some terminology that you come across when we talk about investing. So diversification, spreading your assets, right? Taking multiple sectors or multiple assets within an industry, right? You can diversify your portfolio in that sense, and in that way spread your risk, but also try to capitalize on multiple markets, right? This doesn't, so all your eggs in one basket could be, that's, like in a very, like few opportunities, probably, relatively speaking, and just only moments in time, but like a broader allocation makes much more sense sometimes, or probably more often, when you capitalize on emerging markets, as I mentioned before, or autonomous vehicles, AI, etc. So diversification is a huge thing, and it should be something that to whatever degree is your preference, you should be doing, in our opinion, humble opinion. Dollar cost averaging, another term. So that's working your way into an investment step by step. So you could, for example, take your monthly salary, 5% goes to investing, and every month you allocate something to an asset that you slowly just want to have a position in, like I don't know, Amazon again, there it is, or just any other asset, and you just periodically buy that asset irregardless of price, right? So you dollar cost average, and by the time that you're done, you have an average price. And hopefully, you're right with your thesis, and that thing that you bought sees some more value in the future, and your capital actually grows that way. Now, index investing. So we can also just simply buy the index. I'm not sure. I don't think I've mentioned that, but I think it's mentioned somewhere. But you just simply buy. Yeah, I did mention this. Buy the S&P, buy the AEX, buy an ETF, or that follows an index. That way you just are in the stock market, but you are not necessarily doing all the work of picking individual stocks. So that's obviously a strategy you can go for. And as Chris, our student assistant, really hammered on, is like, we need to give the perspective that for the, or at least that's his perspective, right? That's we all have our perspectives, I guess. His perspective was that for the vast majority, and this is a general perspective in investing, that for the vast majority, that makes the most sense to just buy the index, have exposure to stock markets, and for example, with 25% of your capital, you do that in an index, and you just wait it out for 30 years, because over time, the probability is that will grow. But I am of the opinion that if you spend just a tiny bit more time than the average person, you can do better than that. But that's me. And you can just take that or leave that from me. Now, other ways of going about this, you can give somebody else your money, right? Generally for a fee. So take that into account. You will buy some experience probably from somebody who can manage your money better than you can, but that comes at a cost. So, but that can be an idea, that you put some of your portfolio, right? You can also put just 20% of your portfolio you give to somebody else, and they may end up buying the same stuff as you, but they may have a different strategy, may have more experience. So that's something you can also do. Co-vesting or copy trading is co-vesting is, there are platforms being built within the world of blockchain, at least right now, where you have, it's sort of like social investing. eToro is also big with that, where you can actually copy people that have a proven track record on the platform that you're working on, and you give them some of your money. Also, again, for a fee, obviously. But if you've seen that they have a proven track record, why not? For example, I'm not doing it personally, but I could see that as a possibility, to give somebody, I don't know, like 1, 2, 3% of your capital, and that way, again, you diversify it, different strategy, and in that way, you can have your capital work for you as well. And the same copy trading is kind of the same thing, but then you copy traders, they make trades, you provide them with capital. Lots of cool stuff happening in that space, by the way, at which we'll come back at a later point. ETFs, I've mentioned, can be part of a strategy. Using AI, so something like ChatGPT or the newest iterations of what is coming, you can use that as not as an advisor necessarily, but you could obviously ask that AI tool, like, hey, how did the grades do this? Or what is generally good practice? What should I avoid, etc.? How do fees work, etc.? You can find stuff on Investopedia, but maybe you could get a little bit more creative in that sense. But I would be a big proponent of trying to learn from the greatest in the game. At least that's how, at least partially how I go about it as well. Is like, okay, there are tons of people that are way smarter than I am, way more experienced, and I want to know how they did it. Like, how can you get to a level where you have, like tremendous financial freedom, or such a huge company or whatever, and you just look at how they did it, right? And nowadays, obviously, it's more and more transparent, and that's why, again, have a Twitter account, because a lot of them are on Twitter sharing their thought processes, etc. You will learn so much. Investing strategies, just read through the Investopedia article. I'm going to keep this short, as I said. Druckenmiller recently took a big position in the stock I mentioned before, Nvidia. And this is just a nice interview. He gives some macro perspective. He has a good book recommendation. I haven't read it yet, but I will. And it's just an overall cool figure. And he's the guy that said, if everything aligns and what you're doing, then at a certain point in time, you cannot own enough of an asset. If you are convinced that this asset is going to go up and everything aligns, then why not own, as much as you can? And that's a perspective that we generally, do not get. But he's obviously extremely successful and has made some brilliant trades over the years. So it's a good figure to be watching. Howard Marks, next up. So different format, podcast. 53 minutes. If you're discouraged by 53 minutes of podcast, then really, this is what this game is about. Research, growing the amount of knowledge that you have, and bringing their perspectives into your own thinking. Howard Marks, I really love this podcast. So it's also on Spotify, a whole selection of his memos. So he writes his stuff, his experience to his investors, etc., or just in general about investing. And this just really explains a very solid view of how to look at markets. And especially, for example, a lot of people look at macro circumstances. Howard Marks isn't necessarily a fan of that. So what goes on globally with the currency markets, politically, this whole macro global thing, he's not such a big fan of that. And he explains why. And it's really, like it says, he discusses the disadvantages of short-term thinking, difference between volatility and risk. So he's also not a big fan of traders, for example. And I say also because there are many people that just don't really believe in trading in that sense, very large, successful investors. Again, make up our own minds about what works and what doesn't work. Next up, we have Melody Hobson. I hadn't heard of her before doing research for this program, but I found out she's really quite cool. And let's see, I hope this works, but let's just see what she has to say on the efficient market hypothesis and as a question about Warren Buffett.
Warren Buffett has often said that people will be better off just put their money in stock index funds rather than people who are picking stocks, as your firm often does. You pick stocks. So what do you say to Warren about that?
Well, first of all, he's outperformed by not owning an index. So he's proof positive that it's possible that you can outperform the broad market. But more importantly, in our world, we believe in the efficient market theory, and the inefficiency is in areas that are overlooked, misunderstood. People don't follow it very well. And so that's smaller companies. They tend to be less widely followed. You also see that inefficiency in international markets. That's where we work and live at Ariel. And so we think we can exploit those inefficiencies in those areas, which is where we would say we would respectfully disagree with Warren Buffett.
Yeah, so and that's a really cool perspective, I would say. So what she said is exploiting inefficiencies, and that's where we want to look at as traders as well, but as investors as well. And it simply means that finding the opportunities not entirely. It means more than that. But like a simplistic view is finding the opportunities and seeing the opportunities where other people don't see them, where there is an inefficiency. So it's not really priced properly yet in that sense. And if something is not priced properly yet, it can mean, for example, that there's really structurally undervalued. And in that sense, you can, obviously make more returns than the average of 9 to 11% that the S&P has historically given. About the S&P 9 to 11% metric, we have no guarantee that is going to stay like that in the future. And actually, Druckenmiller that we saw before, he recently, well, not predicted, but he has a thesis where he says like the next 10 years for stock markets are actually going to be a dead market, right? So that we either stay ranging, so within a certain price level for the next 10 years, and that there's not that much growth. And if you combine that with the high inflation that we have, it's like, okay, index investing has always been a thing to do, but it's become so popular that everybody knows about this. Is everybody already invested? Like, are the majority of people that are busy investing already doing that? Like, these are questions that we need to ask. And when we get to technical analysis, I can show you some price charts that actually show like, hey, stock markets could be in not trouble, but like it could be that we are not going to make that 9 to 11% return on a yearly basis in the next 10 years. So, and yeah, this is why important to, do your own research. And if somebody like Stanley Druckenmiller says that, then, well, it's really something to pay attention to and not just blindly buy the S&P and think like, I'm going to buy stocks because stocks are good are good investments and it's going to go up always, right? Who says that is true tomorrow? Let's go back before I go on another lengthy rant again. Okay, so yeah, cool interview. Lots to learn again.
In the workplace.
Here we have Ray Dalio again. So yeah, it's another conversation. And again, to form your own perspective, it just really helps to get other people's perspective from different angles. And that's why we have these conversations. And then why not listen to how the greats do it, what they think about, how they think is probably the most important. Like, how do they look at this game? How do they play this game? What is their decision making? What is their risk management, right? Their risk tolerance. Fascinating stuff. Then, as the advanced source, somebody, Balaji, who is a super famous guy, by the way, very well respected. So if you think that this is a totally ridiculous claim, well, kind of yes, but kind of there's a deeper message behind this. And so this has everything to do with, the way or the direction that the economy is heading into. Cathy Wood from ARK Invest, she is also really legendary. I know she's gotten some heat recently, but she is like an absolute, independent thinker. And she was one of the first, I think she was the first person besides probably Elon Musk who really valued Tesla at what it's, like at a proper value for the future, because she saw where the company was going. And rather than it being an electric car company, she saw that it was autonomous vehicles. It was, it's a software company. It's just completely different. So she had a different way of looking at Tesla, and they made a lot of money on Tesla for that reason. Balaji is very well respected, as I said, huge amount of following on Twitter, and he, claimed that Bitcoin would reach $1 million in 90 days. This is more than 90 days ago. Obviously, it didn't do that, but that was not the point of the thing. What the point was, well, if you're into that, you can listen to this conversation. But it does go in a little bit more deeper. So it's not mandatory, but if you want that extra punch, well, not a punch from me, obviously, but the extra juice, let's use that word, then this is your source. Okay, so I think that is it for investing. I think we've supplied like a ton of material to read and to listen to. And I think you've got a ton to think about as well. And again, I mentioned it, creativity. That's really what this is all about. And the more you have learned about the game, the more creative you can get, right? The more tools at your disposal you'll have. And the result of that is that you're just going to be a better market participant. You are going to outperform this 9 to 11% on a yearly basis. And there's absolutely no reason why you cannot really structurally outperform that, but actually reach very, very decent levels of return on a yearly basis. but it does require hard work. All these people, they didn't get there by sitting on their hands or just throwing money at the next meme coin. It does require work, dedication, but it's oh so much fun, and it's really it helps you think and look at the world in a certain way, and it makes you just all the wiser. So hopefully this week was interesting. We'll see each other next week, and we're going to jump into analysis. Like I said, deeper and deeper. It's going to be heavier. But yeah, we're actually going to make some practical steps at, okay, how do we actually look at markets? How do we identify if something is properly valued, undervalued, overvalued? What can we do with that information? Super awesome. I will see you in the next video.